Welcome one, welcome all to DeFi Crypto and Airdrops, our DeFi Mastermind Friday episode with David from DeFi University. How's it going, brother?
I'm doing well. I'm doing well, Mike. I'm trying to join the live call. Oh, there it is. Awesome. Now I can see the chat. I was wondering who the hell is that guy on the thumbnail, man? Because it's not me.
Oh, yeah, yeah. No,
And then
I was trying to like AI generate one with like your face and stuff like that, and it wouldn't do it. And so finally, I was like, you know what, I'm
it's
just
not a
gonna
real name.
throw an image on there. But yeah, I wanted to throw something up that conveyed a feeling of basically just the success that that you found personally, where you've uncoupled yourself from having to go to a 9 to 5 and work for somebody else, and you've been able to attain that level of freedom that many people, myself included, I mean, I've been able to attain that in a very different way, but that level of freedom, or where financially you are able to live your life the way that you want to live it, not under the thumb of a boss, or or anybody else for that matter. So that's kind of what we want this episode to be about, is obviously focusing on how to utilize DeFi and in a broader sense crypto to set yourself up for to be able to scale your lifestyle and grow, free from having to, have an employer and being an employee, and, have to do that 9 to 5 and commute, and, just all those things that come with it, just that freedom that comes with it. So everybody's like
Yeah.
spamming the chat with VFAT. It's like, yeah, that's part of it. That's part
I
of it.
mean, so VFAT's pretty cool. The only problem for me with VFAT is that they use proxy contracts, and I'm not quite sure that I like that. But VFAT is a great automated
Well,
liquidity management.
explain that real quick, because I mean, it's something that I don't, to be honest, I don't know what that is.
Sure, yeah. So um, I've seen exploits on for some of these proxy contracts in the past. Now that does not mean that VFAT's contracts are insecure. It's
Mhm.
just something that I take into account, and I prefer to go directly to a decentralized exchange rather
Mhm.
than open positions through VFAT and manage them through VFAT. I prefer to go directly to Uniswap or whatever the DEX is when I provide liquidity.
And I definitely, I can see that. I mean, I use VFAT extensively, but it's, to be honest, it's mostly out of, well, I'll just say it, kind of laziness, and but I do put myself at risk, for the things that you talked about. You got to be honest with yourself. It's
Mhm.
me, I really love the functionality of VFAT. Being able to add to a position with any asset that I have on that chain. Not having to sit there and figure out, all right, I need this much of this asset and this much of this asset to enter the pool that I want to enter with the
Right.
range that that I want. So I really wish that a lot of these platforms would, integrate that these functionalities natively into their platform, because yeah, I really don't, but I don't want to get on a rabbit trail.
No, no, no. So
Um,
this is definitely part of it, because there are a
okay, go ahead.
handful of automated liquidity managers like VFAT.
Hmm.
VFAT's just one of them. You could take a look at Crystal. That's
Hmm.
another ALM. You could take a look at Aperture, another ALM, or
Hmm.
you could take a look at Revert. Now, Revert is the ALM that I like best
Yeah.
because it's got some really unique functionality built into it. It's got a lend borrow protocol built into it that allows
Okay.
you to borrow against your concentrated liquidity positions on Uniswap. So that's really what I want to dive into that today. I want to dive into the concept of delta hedging. Um, and I want to talk through the system that I've built where I'm able to live almost completely banklessly. If merchants and service providers accepted stablecoins, I would be 100% bankless.
Yeah.
So I think that that's coming over the next couple of months in the United States. I think that we're going to see more and more merchants and service providers start to natively accept stablecoins as payments. So
I
that's exciting.
I really think the Genius Act was kind of the first step in that direction, and I think it definitely is picking up momentum. to where these, because, and I'm going to say it because a lot of people out there might not understand, but legislation, for institutions, banks, large organizations, asset managers, things like that, legally, they cannot get involved in a lot of the aspects of crypto, or crypto in general, because they have a fiduciary duty, to their, to the assets that, the people that they're servicing. But legally, they couldn't get into crypto before. And so, as this legislation has been started to get drafted, that's how we've seen, ETFs and, all these different aspects, coming into the markets. And it's a double-edged sword. Before, the markets were very predictable, the 4-year cycle, the Bitcoin halving, just the way everything moved, because the average person, the psychology of it, it's very easy to predict, because of emotions. Those cycles moved on emotions. And I know this is something you've been talking about extensively in the DeFi University that I've been attending the past couple of days. Emotion is very predictable and it is very easily manipulated. Whereas these institutions, they're all about, facts, figures, logic, algorithms, all those things, and they use retail's emotions against them. And we're seeing it in the markets. Now that they're in these markets, right now we should be in alt season historically, if you follow the cycle,
We're close. I think we're really, really close. So my favorite analyst, I'm sorry for cutting you off, man, but
no,
my,
no,
my
no.
favorite, yeah, so my favorite analyst, Mike, who I think can read the Bitcoin halving cycle best, he can read that pattern. That's Ben Cowan. He has been prescient this entire cycle.
Are you
He's
getting paid by
been
Ben
right.
Cowan? You like
No,
bring him
man,
up?
well, because he's been right. I bring him up because he's been right,
I know. I'm just
and
giving.
so, yeah, no, no, it's all good. I just, what he's been calling for is that we would see Bitcoin dominance move a little bit higher throughout the rest of this month and into October. And you know what? He hasn't just been right about this most recent call. He's been right for the last couple of years, calling Bitcoin dominance and calling ETH BTC. And he's been right, man. So I think alt season is very, very close. We're not
I hope
quite
so,
there
man.
yet. I
I
really do.
really hope
I
so.
really, really do. And I just think that this time around, the driver of alt season is different than it has been in prior cycles. So last cycle, I think the driver of alt season was the Fed printing $4 trillion over the course of 18 months, and then the US government and global governments forcing people to stay home, the COVID policies,
Yeah,
and then giving them, giving people stimulus checks
yeah.
and I think that that fueled a lot of speculation in alts last cycle. But this cycle, I think what's going to drive alt season is increased adoption. So I think it actually could be TradFi adopting crypto and DeFi. I think that that will spur a lot of user growth. And that could be the driver of alt season this cycle. So that's what I'm looking forward to.
Well, let me before we get too deep into this, let me share a couple of things real quick. So let me do this, and I'm going to share my screen. All right. So, before we get too deep into this, if you want to join the conversation, pop on over to YouTube, DeFi, Crypto, and Airdrops. This is our channel here. Ton of resources. Of course, we have all of our brother channels. Discover Crypto for all your macro news. Both traditional and crypto. Blockchain Report, my boy Jeff, with the Airdrop Alpha. Blockchain Basement, my boy Drew, over there at Discover Crypto, always has great info to put out. Jake Call is on the Wednesday show with me and David. Great guy, creator of Metrics Finance. Awesome tool that I personally use, and I know David that you've used it, and you've actually been somewhat working with him as far as giving him some advice on some of the functionalities, because I know that the lend borrow feature he was talking about is going to be launching soon on it. not just liquidity pools, but that lend borrow feature. And then of course your channel, DeFi University, and then of course your DeFi course that if anybody's interested, very affordable. And again, I've actually started going through the course myself. Is in the link of this of every one of our shows and on the channel for both Metrics Finance and for David's DeFi University. Now, something that David was just talking about that I think is important that we all understand is how this cycle is different, and it has a lot to do with adoption. And part of that adoption, and the market share of it is RWAs and DeFi, and it is why I personally am so laser focused on this one use case. There's so many other use cases out there. There's gaming, there's DeSci, decentralized science, all kinds of narratives. AI. Me personally, for crypto specifically, I see DeFi and art tokenization of real world assets as being the largest use case and where the largest amount of liquidity is. As you can see here, 2022, 2023, 2024, and 2025, we are just going more and more parabolic as far as total value locked, liquidity that is being injected into this use case. I mean, just in private credit alone, we already have 17.2 billion. And that's just since, you figure, as legislation, as I mentioned before, legislation has to be passed before these institutions can get involved, in these sectors. But real quick, and then I'm going to kick it over to David. But you can see that the majority of this stuff is U.S. Treasuries, and a lot of it is stocks that is being tokenized. The New York Stock Exchange, they are in the process of working with Ondo, is one of the major ones. They are tokenizing these, the stocks from the New York Stock Exchange. Now, something to understand, and the reason I want to mention this plays into what me and David were just talking about. But you don't see the price of Ondo moving. The price of Ondo has been flat. The amount of liquidity that is being injected into, let me pull it up real quick, into Ondo, you can see here, Ondo has $1.6 billion of liquidity that is currently tokenized on it. You have securitized, you have tradable Ondo centrifuge, but you can see Ondo is growing massively. It's grown 20%, as far as holders of real world assets just over the past 30 days. Its stablecoin market cap is up 40% in the past 30 days. It's up 16.4% on TVL in the past 30 days. Yet the price isn't moving. Watch what big money does, not what they say. That is how you're going to be able to weather this and stay unemotional. They are not going to spend the money and the time it takes to tokenize the New York Stock Exchange onto one of these chains unless it is of value. So I just wanted to put that out there before we jump into this, David. But yeah, go ahead and share your screen, and I'll kick it on over to you.
Yeah, man. So, when it comes to real world assets, and let's just talk about, the Ondo token, I think there's a disconnect between, the onboarding of more TVL onto Ondo and the price of the Ondo token.
Mm-hmm.
So just because you're seeing massive TVL and user growth, how does that feed through to the token price? What is the mechanism by which revenues that Ondo is likely generating are returned to token holders? Does
Mm-hmm.
that mechanism even exist? That's what I would learn about because
Yes,
I think that the growth that we're seeing is just the very tip of the iceberg, just beginning.
absolutely.
So, like, if Treasury Secretary Scott Bessent is right, and we see the stablecoin space grow over the next 24 months from roughly what 200 billion, something like that, that it stands at now today, to he projects $2 trillion in stables on chain by 2028. That is massive growth. So I think what we're seeing here is just the very beginning, and we're going to see much, much more growth in treasuries on chain, and that just means stables on chain.
Mm.
So yeah, I think this is the beginning of the tokenization of everything, and it's starting with stables, it's starting with treasuries. So yeah, I think it's going to grow massively from here.
Well, while you throw your screen up, I'll read this question. I know everyone's finances are different, but how much would David suggest deploying into DeFi to begin the 100% bankless journey? Asking for a friend.
Sure. So here, let me just go ahead and share my screen, and let's hop to it. All right, I'm going
Ah,
to share my entire screen, and then I'm going to pop into Trading View just so that I can draw on here. Okay, so um,
one second. One second. I'm throwing it up. Let me adjust it, and then I'll make it live.
so Um, to answer the question about how much capital is required to live banklessly, well, you can live banklessly with any amount of capital. That's really not the important thing. It's more about, what do you need in terms of cash flow to be able to live your life, and what do the mechanics of living banklessly look like? Okay, so let me walk you through it. Number one, you need a handful of trusted protocols, and let me show you which protocols I use. I use Aave, I use Uniswap, I use GMX to hedge when I need to. I also built in a hedge into my capital structure on Aave, and then I use EtherFi when I need to spend in real life, at a merchant that does not
That,
yet
that's,
accept
that, that's
stables
your
or
off
crypto.
ramp.
Yeah, so this is what allows me to, and this is an E, by the way, E for EtherFi. This, I know it's difficult to draw, man, with a mouse like
It's,
this.
it's all right, man.
Yeah, but so EtherFi, when I logged into my account earlier today, EtherFi, because I live off of this, for the next 30 days, they're giving me 20% cash back up to $1,500. So just let that sink in for a second. On every purchase that I make over the next month, up to 1,500 bucks, I'm getting 20% cash back. Now, 20% cash back, it's minted in Scroll, SCR, the Scroll token. So when I buy something in real life using EtherFi, I'm actually running an arbitrage play on EtherFi. So I'm borrowing against stables that are earning something like 10%. And when I spend in real life, I'm borrowing against those stables and I'm paying 4% to borrow. So I've got a nice fat net interest margin of like 6 points or so. And so what that means in practice, Mike, is that as long as I keep that arbitrage open for long enough, and I ran the math, it would take about 70 months of leaving that arbitrage open for the ARB itself to repay my spend in real life.
Mm.
That's pretty darn cool. So I live mostly off of EtherFi, and GMX, Aave, and Uniswap are the three protocols that I use to manage my portfolio. And so I want to walk everyone through how you can use these protocols together to build a delta hedged cash flowing portfolio in DeFi. That's what I want to walk through today. And so
Perfect.
there's a couple of concepts that are really important to understand first and foremost. Let me see if I can just move this out of the way here. Okay, so the first concept that we've got to understand here is the concept of delta. Okay, this is the first thing that we need to understand. And delta, usually you'll see it as a triangle. Delta is rate of change. So in this context, you're going to hear me use the term delta over and over and over again. And what I'm talking about here is how many ETH deltas do I have? How long am I? Am I flat? Meaning, do I have zero deltas? That would be
Well,
delta neutral.
and correct me if I'm wrong, but it's the reason that you're talking ETH deltas is because you usually use personally ETH in your process, or your system. but somebody could use Bitcoin, somebody could use pretty much anything else. But in your case, ETH is your token of choice.
So yeah, someone could use wrapped Bitcoin or CB, Coinbase wrapped Bitcoin, CBBTC, or they could use some other Bitcoin derivative as collateral. The challenge with using Bitcoin is that the LPs don't yield as much as the ETH LPs. So I'm
Well,
in
I just mean it
right, right,
in
right.
general.
No, I'm
Somebody
just
could, but
no,
yeah.
of course, you absolutely could. So there are pros and cons here. So if
Mhm.
I'm using Bitcoin derivatives, then I'm
Yeah,
not
you
going to
might only
just
get
be
like
able to.
0.6% on your lend or something like that. It's nowhere near what you could earn on with ETH.
It's more so about the volume in the liquidity pools on Uniswap that contain Bitcoin derivatives and a stable coin. That's really more what it's about.
Okay.
Um, so for me, I live off of the cash flow from my CLPs, my concentrated liquidity provision positions on Uniswap. If I were to allocate to Bitcoin CLPs, my cash flow would be cut significantly. So um, the important thing for me, and I run my life on Ethereum, the
Mhm.
important thing for me is being able to hedge my deltas. That's the important thing. You could absolutely run this same strategy using Bitcoin. It's just you won't be able to generate as much cash flow. However, the trade off to that is the positive there is Bitcoin is much less volatile than ETH is. So
Mhm.
you got a pro and a con, right? Bitcoin's much less volatile, but you won't be able to generate as much cash flow. ETH,
And
on the other
and I'm
hand,
asking a lot of these questions because I'm learning with everybody that's listening.
yeah.
I've listened to you a couple times about the deltas and your system and things like that. But as always, you're the subject matter expert, and I'm just trying to kind of divine some of your knowledge. But go ahead. I'm sorry.
Oh, yeah, no, for sure. So, delta, rate of change. And let's go ahead and take a look at what this looks like in practice, real quick. So, the S here stands for supply, the B stands for borrow. You could use collateral and debt. I like to use supply and borrow, but either term works. And so, if we're on a money market, I use Aave for this. And let me just walk you through how I create my core position on Aave. Okay, so on the supply side, I will supply, let's say, 75 ETH. Okay,
Mhm.
on the borrow side, I might borrow something like 50 ETH. And so here's where the concept of delta comes into play. What are my net ETH deltas here? I am plus 25.
Mhm.
So I'm long 75 ETH on the supply side, and I'm short 50 ETH on the borrow side.
So the
Net net,
difference is 25 on the
exactly
positive.
right.
Yeah.
I'm plus 25 over here on Aave. So what does that mean? If I'm plus 25, it means I've got 25 positive ETH deltas on Aave.
Mhm.
So, what that means in practice is for every dollar that ETH moves, my position here on Aave moves by $25. Okay?
Mhm.
So, just want to make sure that that's landing for everyone. Let me just
Mhm.
repeat that one more time. If I've supplied an asset on Aave or any money market really, I'm long that asset that I supply. If
Mhm.
I borrow an asset against it, I'm short. And not the act of just borrowing doesn't make you short. You've got to borrow and then do something with what you borrow, swap it for stables to
Yeah.
actually make yourself short. But if I am, let's just say for the sake of this example, borrowing 50 ETH, I have a source of negative ETH deltas here. But
Mhm.
I'm over collateralized on Aave. So net net, I'm plus 25. I've supplied 75, I've borrowed 50, and I'm plus 25 overall. Okay, so that's Aave. But what do I do with these 50 ETH that I've borrowed? What do I do with them? Well, that's where the cash flow comes into play. So let's take a
Hookers and
look over.
blow.
Yeah, man, that's what I'm talking about. So, So let's head on over here to Uniswap, and on Uniswap with those 50 borrowed ETH, what I've done is I've entered two concentrated liquidity provision positions. Now I've used Revert to perform analysis using that Discover tool on Revert to find the best concentrated liquidity provision pools over on Uniswap.
Well,
And
really quick, don't let me forget. I definitely want a little bit of a tutorial on Revert before the end because I'm really interested in that because I know it's a key part. But go ahead. Sorry.
oh yeah, yeah, no. So we're going to get to that.
All
I've
right.
got on my browser, I've got Aave and Revert and GMX open and ready to
Perfect.
go. So we're going to hop into that in a second. I just want to get through these basic concepts first, so that we're
Don't
all
let
on
me
the
get
same
you in a
page.
rabbit trail. Go ahead, brother.
It's all good, man. So, okay, so over here on Uniswap, what have I done? Well, I've opened two CLPs, two concentrated liquidity positions, using these 50 ETH that I borrowed over here on Aave. Okay,
Okay.
so with these CLPs, what is the important thing to know? The important thing to know when it comes to delta hedging these CLPs using the source of negative ETH deltas that I've got up here on the borrow side on Aave, the way to hedge this stuff is you've got to know how many ETH will you be long if your liquidity provision position were sitting out of range on the downside. Remember, CLPs are nonlinear products. And so while you're in range, you have a combination of both tokens in the pool. So if I'm in, let's say, ETH USDC here for one on base, and if I'm in ETH USDT for the other position over here on mainnet on Uniswap, then if these positions are in range, they will contain both ETH and USDC. Now, the higher the spot price goes
Real quick,
within,
does it matter if it's a crypto stable pair or a crypto pair?
well, when you say does it matter? Yes, of course, it
Mhm.
matters. It matters a lot, actually.
Yeah.
So, crypto to crypto pairs, sometimes referred to as correlated pairs, you need to take a look at more than just the correlation. You need to find out whether those pairs are co-integrated or not. And
Mhm.
sometimes these correlations break down over shorter periods of time. So you might
Well,
see.
for the sake of time, maybe I'm sorry I asked the question. We'll just say
You cut me
it's
off
a
on a
lot more
tangent.
complex. It's a lot more complex because you're dealing with
It's
two moving targets as opposed to one.
it's more difficult to hedge.
Yeah.
That's the
Okay.
thing. So that's not the only thing though. Also, the yields are typically much lower
Mhm.
for so-called correlated pairs. Now, why is that? Well, it all comes down to volume, and so the pools that have the highest volume and the most consistent volume, those are the pools that I am most interested in, and those are the pools that I'm in. So I
Yeah.
think there are a handful of consistently high yielding concentrated liquidity pools on Uniswap. I'm in two of them. And in just a moment here,
USDC historically for me has been one of my best earners. Absolutely.
right, but it's more than just ETH USDC or ETH USDT. You've got to find the pools at the right fee tier, on the right chain, on the
Mhm.
right DEX, with the correct amount of volume. So
Mhm.
there are a couple of factors that we're looking at. I'm going to show you how to do that analysis in Revert here
Okay.
in a second.
All right.
But the important thing that's you really got to bring this home is the fact that these CLPs, you become more long on the way down and less long on the way up. Let me restate that. If you have a CLP, and this is the upper bound of your range, this is the lower bound of your range, and spot price is smack dab in the middle of your range, then you've got 50%, roughly speaking, just about 50% in the stable right here.
Yep.
below the spot price, and
Mm.
you've got roughly 50% in ETH above the spot price. This
Mhm.
is if the spot price is smack dab in the middle of your range. Now,
Mhm.
what happens if price moves up?
It
Well,
starts selling off ETH into USDC.
exactly right. Your ETH is sold for USDC on the way up. What
So
happens if price is
you get
sitting out of range on the upside? If price is sitting out of range on the upside, you are 100% in the stable. 100% in this example in USDC. What does that mean for your ETH deltas? If you're sitting out of range on the upside 100% in USDC, you have
you're short.
zero. No, not
Oh,
necessarily.
oh, okay.
For this CLP, you have zero positive ETH deltas when you're sitting out of range on the upside
Because you have no exposure to ETH.
because your ETH has been sold on the way up, and now you're sitting 100% in cash out of range on the upside. What
Got it.
happens on the way down? On the way down here, when you've got the spot price below the lower bound of your range,
They're all
well,
in
on
ETH.
the way, exactly right. Your USDC is used to buy ETH on the way down within your range. And then when price is sitting out of range on the downside, your CLP is 100% in ETH.
Hmm.
So, the important thing here when it comes to delta hedging these CLPs is you've got to know how many ETH will you be long if price is sitting out of range on the downside.
Hmm.
So, for the sake of this example, let's say that price were sitting out of range on the downside for both of my CLPs here. Well, I happen to know that if I'm sitting out of range on the downside, I would be plus 15 in
On
both
each.
of these
Yeah.
CLPs. So that means that I would be plus 30 in my Uniswap CLPs if the price of ETH were sitting out of range below my range. So I would have a source of 30 positive ETH deltas in these CLPs if I'm sitting out of range on the downside. So let's take a look back up here at Aave. Remember, I've got this lend borrow position, right?
Yeah.
And if price is sitting out of range on the downside, well, then I have been able to hedge those CLPs, but I'm still long. And on the way down, I become more long. So if I'm sitting
Plus
out of range on the
25.
exactly. I would
Yeah.
be this plus 25 plus the 30 from those
Hmm.
CLPs. So I'd be plus 55 on the downside. That's pretty darn long. How do I hedge that? Well, I use I use futures.
It sounds like really the battle, just to kind of quickly summarize, before you continue on, is really just to try to stay as close to zero as possible. I mean, is that
Maybe
correct?
Maybe. It depends. You could do that if you want to, or you could use these CLPs almost like short puts, where as price moves lower, you want to sell puts well, if you have high conviction in the underlying, like I do. I believe that ETH is going to push well above $5,000 over the next couple of months.
Huh.
So that means that on a dip, on a pullback, like we've seen in ETH over the last 2 weeks, ETH is down greater than 20% from its high near 4,800 bucks 2 weeks ago. So
Hmm.
on this correction in ETH, if I were trading options, I would want to be selling puts on the way down because I have a high level of conviction in ETH. Now, why is that?
Well, and I
Now
know you were saying earlier that there is nowhere to really do that because the liquidity isn't deep enough.
right, but you're exactly right. There are a handful of decentralized options trading protocols that will allow you to trade, but the markets are so illiquid that they're almost illusory. Because
Mm.
if things become volatile and all of a sudden there's no market at all, or the spreads are like ridiculously wide, then you can't trade, which
Mm.
means that, yeah, there are options protocols, but you can't use them. So
It, it,
yeah.
it's like what is it? What do they call that? The tits on a boar. They're pointless. Useless.
So here let's take a look at this, Mike. Delta, gamma, theta, And we can leave it at those three. So these three, they're referred to as Greeks. These three Greeks, concentrated liquidity provision has in common with options and that Black-Scholes model. So you use these Greeks along with that Black-Scholes model to price options, but short puts look a hell of a lot like concentrated liquidity provisions when paired with a stable, or just CLPs generally speaking. Options and short puts and CLPs paired with a stable are both long deltas. So while you're in range, or if you're sitting out of range on the downside, your CLP has positive deltas. Same thing with a short put, positive deltas. Gamma, that's your almost like your speed of delta. That's how quickly does your delta change. Both CLPs and short puts are negative gamma. And theta, when you're trading options, if you're short a put, you've got positive theta. That's your time decay. But in CLPs, if you're sitting in range, you also have, it's not really theta, it's not time decay, it's your fees, your fee APR. You could think of that as your theta. That's your yield. So you've got positive theta in CLPs. So options and CLPs paired with a stable have these Greeks in common. So I think about my CLPs almost as if I were thinking about trading short puts, if I were trying to sell puts on the way down. So that's just one observation there. Now I
It,
want to get
real,
into
real
the
quick, those
mechanics.
of you out there listening that maybe you're not grasping all this, because I know I'm not. It's recorded. Go back and watch it again. Take notes. We do not expect you to be able to grasp all this in one sitting. It's taken me weeks and weeks and weeks of talking with David and Jake to grasp, the gamma and the theta and the deltas and all these different things. So do not feel like that you're behind the power curve because you're not
Yeah.
grasping all this. It's a lot
And
to take.
and it really is. And Mike, there's a reason why sometimes people say you're speaking in Greek. Well,
Yeah.
because this is literally Greek, man. So like they're
Yeah.
called the Greeks for a reason. It's
Yes.
literally Greek. So
Yeah.
if you don't get it on the
Don't
first
get discouraged.
go round, don't get really don't get discouraged. It is complex, but I'm going to do my best to break this down. So let's go ahead and take a look at the browser. And let me hop into, these are my positions that I'm in now. This is what I'm living my life on. If you want to learn this, you absolutely can. What you really need is a mentor and someone to walk you through it so that you can avoid making costly mistakes. That's super important. Okay, so we're taking a look at these two CLPs. The important thing here is not necessarily just showing you the performance of these CLPs right here. The important thing is, how did I find these specific pools, and why are these why are these the best pools to be in? Why am I in them? Let me show you how to perform that research using Revert. I'm going to hop in here to the Discover tab. And the first thing that I want to do is make sure that I'm looking at the correct chains. I only want to look at three chains here: ETH mainnet, Arbitrum, and Base. Now,
Mhm.
why do I want to filter out every other chain except for those three? Well, because I plan to use Revert's lend borrow functionality to borrow against my CLPs on Uniswap v3. I can only do that if those CLPs contain specific assets and if they're on specific chains and
Mhm.
only on Uniswap v3. So that is super important to know. That's why I'm filtering for just those three chains. And these are the only assets that can be in the pool in order for you to be able to borrow against the position. So on Arbitrum, these are the assets that you can, if the pool contains only these assets, then you can borrow against it on Revert. Over here on Base, these are the assets that we're going to be looking at. And over here on Mainnet, these are the assets. Now, I happen to know from my years of experience as a DeFi operator and providing concentrated liquidity on Uniswap that WBTC pairs pay less than ETH pairs. Now, why is that? Well, ETH is much more volatile and there's much more consistent volume and elevated volume in ETH pairs, and specifically in ETH stablecoin pairs. And so now that I know that I can borrow against my CLPs only on these three chains, and only if they contain these assets listed here, that really helps me to narrow things down on the Discover tab. So the first filter, mainnet, Arbitrum, and Base. The second filter here is by tokens. So I know I want to enter a CLP that contains ETH and a stablecoin. So I want to look only at ETH and USDC and USDT. And then this filters button here, I'm going to click this, and I want to make sure that I click Uniswap v3 because we can only borrow against Uniswap v3 CLPs over here on Revert. The last thing is TVL. I only want to look at pools that have at least $500,000 in TVL. That is really important. I don't want to look at pools that have less than 500K in TVL.
There you go. I was going to say that was 5 million, but yeah, you fixed
Yep.
it.
Yep. So, Mike, now that I've checked off the right filters, what else do I need to filter by? Well, I need to filter by fees to TVL. This is the
Oh,
important metric here. So I'm going to click on fees to TVL, and now I'm sorting by this metric. And notice up top, you see where I've got different time frames?
mhm.
What I want to do here is I want to zoom out. I want to zoom out to 1 week. Okay, these over the last week are, according to Revert, the highest paying ETH stablecoin pairs on Uniswap across these three chains. But 1 week is not enough data for me. I want to zoom out to 1 month. Now, if I zoomed out to 1 year, I would be able to see the pools that have been most consistently high paying over the last 12 months. That's a little bit too long of a horizon for these. I want to take a look at 1 month instead. And so notice the pools that rise to the top of the list here. Here we go. This base Uniswap v3 pool, wrapped ETH USDC at the 0.3% fee tier. I'm in this one. Why am I in this one? Well, because according to these Revert data, it is the highest paying ETH stablecoin pool over the last month. I'm in it. Now, this pool also wrapped ETH USDT on mainnet on Uniswap v3 at the 0.01% fee tier. This is the third highest paying pool over the last month, according to these Revert data. I'm in it. And what I can tell you from my performance in these pools is that these data on Revert are correct. these two pools that I'm in have been very, very consistently high paying. Now, this fee APR, I am significantly outperforming this. I've been doing just about a consistent 120% fee APR with a plus or minus 5% wide range in both of my ETH
Man,
stablecoin
that's
pools.
that's over 10% a month.
It is over the last 60, 65 days or so. So it's been very, very
That's
consistent.
huge. That's
It,
huge.
it really is. And that's what allows me to live my life is that cash flow. So let's take a look over here at the dashboard and let's just take a look through what are we looking at here. Okay, so I have pooled assets and this fee APR I'm earning on this pooled assets amount. Okay, so each of these pools, if I click and open, are paying about $200 a day. And they have been doing that consistently for months. Okay, the volume in these pools on Uniswap v3 is very, very consistent. Now, there's a period of time where the volume consistently dips. Can you guess what it is? It's the weekends. Oh,
Weekends.
it's the
The dreaded
weekends, man.
weekend.
And you know what else? Liquidity is thin on the weekend. And
Mhm.
so, what did we see last Sunday? The start of this liquidation cascade that we're still trading through right now. So, um, on the weekends, volumes tend to decline. That means fee APR declines on the weekends. During the week, however, the volume picks back up. So um, let me go
Really
ahead.
quick, I want to. It looks like Stan might be, and maybe I'm wrong, but I think he might be a little confused. He's asking, is there a rebalancing average for the CLPs?
So I'm not quite sure I understand the question. A rebalancing average. Stan? What do you mean by that? You want to
I think he
maybe
might mean
maybe?
like, how often are you having to rebalance? How often are you going out of range on your pools?
Oh, sure. So over the last 2 months or so, if we just we can actually take a look at that. So let me
Well, and how do
close
you
this
set your
up.
ranges? I guess that's a better question. How do you set your ranges?
Sure. Very, very easy. So let me just go ahead and bring it back on over here to TradingView, and I'll show you guys how I set ranges. So um, I do my best to not try to predict direction.
Hmm.
And on my initial entry, let me just go ahead and remove these little brush strokes. It's going to take me a bunch of clicking to remove these. But what I do is I have enough experience to know that there is a sweet spot when it comes to range setting for specific asset pairs. And it all comes down to the volatility of the underlying. So for me, I think the best pools to be in are the ones that are the most consistent and where the underlying is the least volatile. ETH is pretty darn volatile, but it's okay. It's made up for by the fact that the volumes in those ETH stablecoin pools are elevated and consistent. So let me go ahead and just draw on here. Let's take a look at this. Now, if I were setting a range on my initial entry in an ETH stablecoin pool, the first thing that I would do is zoom out to a daily. The next thing that I would do is grab this little measurement tool here, and you don't even have to, do it using TradingView. You could simply do this right there natively in Revert. I like to set plus or minus 5% wide ranges on entry. And I do my best not to try to predict direction with my range. I want to be equidistant on entry. Okay, so plus or minus 5% wide, I have found this to be almost like a sweet spot when providing liquidity in ETH stablecoin pairs. Now,
Well, and
what
I find it interesting when you did that. You can almost see, where you put those lines that they historically, multiple times have acted as lines of support and resistance.
I think, Mike, in this case, that's just coincidence. I
Yeah,
would have set a plus or minus 5% wide range regardless of whether this lower bound of the range landed at support or
like I said,
not.
I just find it interesting. But go ahead.
Yeah, it definitely is. So there's a sweet spot, and I think it's plus or minus 5% or so on ETH in these specific ETH stablecoin pairs. Now, whenever people talk about CLPs being a form of leverage, they're exactly right. Why is that? Okay, if I were to deploy 15 ETH into this CLP, if I had just held those ETH, how many ETH deltas would I have? 15. If I take these 15 ETH, deploy it into the CLP with a plus or minus 5% wide range, how many deltas will I have? Well,
7.5.
I don't know off the top of my head. No. You might think you would have 7.5, but it can be a little bit more complicated than that depending on how wide your range is. So, your CLP, if you take these 15 ETH, deploy it into the pool, then yes, you're correct, Mike. You would be plus 7.5 above, and then you would have USDC or the stable below. But because you've set a narrow range, plus or minus 5% is narrow, because you've set a narrow range like that, your position will move by more than 15 deltas. You have many more deltas than if you had just held the ETH and not deployed it into the CLP. You might be something like plus 200 in your
Oh,
range, meaning that, yeah. So the more narrow you set your range, the higher your deltas become. The wider you set your range, the fewer
Oh,
deltas you
yeah,
have.
because
It's a
of
form of
the
leverage.
movement and how much it, yeah,
It's a
yeah.
form of leverage.
Mhm.
So I'm hedging these ETH deltas, but the position might move by more than that depending on how narrow my range is. That's the leverage that people talk about when deploying into CLPs. The more
Because
narrow,
now, if I remember right, because you were saying that the deltas are basically for every dollar ETH moves, the effect that it has. Is that
right?
correct? Okay.
Yeah, so for every dollar that ETH moves, if I've got 200 positive ETH deltas in my CLP, for every dollar ETH moves, my position, the notional value of my position, would move by $200. Now, if I had just held those ETH, I would have fewer ETH deltas because I don't have any leverage, because I haven't deployed them into a CLP with a narrow range. The wider you set your range, the fewer deltas you've got. The more narrow you set your range, the more deltas you've got. So the more narrow, the more leverage. The wider you set your range, that's less leverage. So that concept is really important to understand here. Now, when it comes to range setting for CLPs here, I don't try to predict direction. All I do is set a plus or minus 5% wide range because I know that divergence loss is unavoidable. Divergence loss is something that you will encounter as a liquidity provider. And so, how do you beat divergence loss? The way that you beat impermanent loss or
Louder.
divergence is fees. It's
Yeah.
fees. So the way that you get to positive divergence is by keeping your positions open and in range for a long enough period of time. That's the way that you get to positive divergence. So that is a little bit about CLPs. Now, let's talk a little bit about delta hedging these things. So, if we take a look here, you see where it says current assets down here, 12.91 ETH? This
Mhm.
is what I'm actively hedging with my capital structure over here on Aave. So, if I just open up Aave real quick, let's just take a look through this, okay? So, I want to be long, but I want to be responsibly long. So that means right now, borrowing ETH. I would really like to, over the next couple of days or weeks, start swapping this ETH for USDC. So when we get to what I think could be a bottom, I'm going to start swapping that borrowed ETH for stables. Now, why would I do that? Well, because
Lock
this
in that
vol
value.
well, I'm locking in a profit on this short position and I'm increasing my leverage. So when we get to what I think could be a bottom on ETH, hopefully over the next 2 weeks, I will start to swap that borrowed ETH for USDC. That gives me a source of further positive ETH deltas, which just means more leverage. So I'm just
Well,
waiting here
real quick,
patiently.
because I'll be honest, that kind of confused me. Switching out of ETH into USDC, how would that be positive ETH deltas? I would think it'd be the opposite.
Yeah, sure. So here, let me see. Is there a drawing tool? I don't think that there's a drawing tool here that I can
No,
use to
not on the
draw.
streaming software. No.
Yeah. So here, let me hop into Trading View so that we can take a look at this. Okay. So I'm just going to
And I'm
move
sorry if
this.
I'm the only one that confused, but yeah, that just
No. It's all good. I'm sure that there are a lot of people who have that same question. So on the supply side and the borrow side, I'm plus 75 on the supply side and minus 50 on the borrow side. So what happens if price moves lower? What happens if ETH moves lower against its US dollar pair to the borrow side? Well,
Mhm.
remember, if I borrowed 50 ETH and price moves lower, then the amount in US dollar terms that I've got to pay back here goes down. So it's a classic short position. If I initiate an ETH borrow with
and
ETH
and
at
and for those of you out there that don't understand that, it's whenever, like, say you borrow 1 ETH, it doesn't matter what the price does after that. If the price goes up, then you have to pay more to pay that 1 ETH back. You're paying back the amount of crypto you borrowed, not the dollar amount.
so you're paying back the amount of crypto,
Yeah.
but the US dollar amount that you have to pay back is really, really important because
Oh, no,
these
no,
money,
it is. What I mean is in this case, if you bought 1 ETH at 4,000 and it goes down to 2,000, just for nice round numbers, you still only have to pay back 1 ETH. And
right,
so, basically, because you bought, if you transferred that and locked in that value into USDC, ETH goes down to 2,000. You still have that $4,000. You can use 2,000 of it to pay back that loan and keep the difference. So I just
exactly
want
right.
people to understand, whenever you borrow crypto, you have to pay it back the crypto amount, not the dollar amount. So I just want to make sure, and I'm sure, yes, the dollar amount's important in this case, but I just wanted to add that, so those that
Yeah,
don't.
yeah. So the unit of account on these money markets is the US dollar. So
Mhm.
if I borrow, let's just say I borrow one ETH at $4,500, right? So if I borrow one ETH at 4,500 and then ETH moves to, let's say, 4,000, and this is exactly what I've done here, then I have to, if I want to realize that profit, I have to buy back that ETH, and that would net me a $500 profit for every ETH that I borrowed at 4,500 bucks. So if ETH continues to move lower here, I'm going to seriously consider starting to repay those borrows by swapping
Absolutely.
that ETH for USDC. That would allow me to realize that profit, and it would increase my leverage. So your initial question there was about why does repaying the borrow increase your leverage? So let's take a look at that real quick. So if I've
Okay.
supplied 75 and borrowed 50, and then let's say that I take 25, and that would be much greater than I would do. I would do it in increments of maybe 5 or 10 ETH. But let's say that I take 25 ETH here and I swap it for USDC. Well, that would be roughly $100,000. So all of a sudden, I would have minus 25 and 100K in stables on the debt side. So what is my new net? What is the net? Now I'm plus 50. So I've increased my exposure to ETH by taking some of these borrowed ETH and swapping them on the borrow side for stables. That reduces my borrow, which has the effect of increasing my ETH deltas.
Mm.
Is that landing, or do I need? I should probably go through that one more time. So here,
Maybe really quickly, because I'll be
yeah.
I'll be honest, it didn't fully land with me, because in my mind I would have thought that having less exposure. Well, I guess you still have exposure to ETH because of the borrow. But anyway, go ahead.
Yeah. So if I'm plus 75 on the supply side and minus 50 on the borrow side, and I take 25 of these borrowed ETH that I am short and swap them for USDC, now I'm minus 25 on the borrow side. And so net net, I've just increased my
I
ETH
see.
deltas.
Because you locked in the value. Okay, I understand now.
Right. And so now I've got a much greater amount of leverage on.
Hmm.
So that's because I no longer have such a correlated borrow. I don't have such
Gotcha.
a correlated
Gotcha.
lend borrow any longer.
Gotcha.
So yeah, Mike, I could go on about this all day long, man. But we're at the hour. So you want to maybe can we you want to pick this up on Wednesday with Jake, or what do you want to do?
We can do a unscheduled stream if you want. I mean, if you're not busy later on tonight or tomorrow. I mean, I whenever, man. I love doing this so much, and I learn so much that, I mean, I'll make time. So yeah, whatever works for you.
Yeah, so I guess if there was one final thought that I could leave for all the viewers out there, it's that living banklessly is possible. You can do it. All you've got to learn is how to operate in DeFi. And you need a mentor to avoid making expensive mistakes. So, this stuff is 80% mindset and 20% DeFi operations. When you learn how to operate on these protocols and how to operate safely in DeFi, that's only 20% of the game. The other 80% is how do you manage this thing? How do you manage your head? It's not easy, man. And so
And
that's why, Mike, I built that investor mindset course in the school community, in the DeFi U school community.
well, and maybe we need to do an episode on that because I mean, I'm definitely not the subject matter expert when it comes to DeFi, but when it comes to discipline and kind of like control over my emotions and things like that, I'm definitely a subject matter expert. Just from my 22 years in the military and a lot of the training that I went through is tested my limits mentally, physically, and you have to have a very dialed in level of discipline over yourself, your environment, just all of those things, and often very high high stress situations where the ultimate price is on the line, so being able to stay emotionally detached in those types of situations takes a high level of discipline. So I think that's why I do so well with crypto and the volatility and DeFi and all these things is because I, at a very high level, can remove myself emotionally from the market movements. I've done my research. I assessed the battlefield, came up with my plan, and as the environment changes, as the battlefield changes, then I have contingencies. I know what I'm going to do. And I don't make those decisions based off of emotion. If I feel myself getting emotional, I'll retreat for a minute. I'll regroup. Once I get my emotions in check, then I re-engage, and that's I think it'd be something that'd be really valuable for us to talk about. So
No doubt, man.
so, all
100%.
right. Well, one last thing, closing thoughts. David brought up a really good point about mentorship and about basically community. So you have I mean, you have more than two options, but with us, you have the option of joining our Discord. Again, the link is in the description of the channel and the all of the episodes. And also, David has a great community. Again, the past 2 days I've been going Monday through Friday. He has a live call with the members of his community. And he has lessons much like we do here. But community is a great place to connect with other people and to find somebody that you kind of vibe with. That maybe me
So
personally. Oh, go ahead.
here's the thing, Mike. When people are looking for a community, you've got to go to the community where the person or people leading it have something you want. Okay. And they've got to prove it. They've got to prove that they're walking the walk, not just talking the talk. There
Well,
are
and
all
that's
sorts
what I
of,
was about to get at
yeah.
was, something I've always done is, even before crypto and online throughout my life, I've
Mm.
always found somebody that's achieved what it is that, I'm striving for. And, obviously that has actually done it, not just like you said, talking about it. And I have aligned myself with them. And often I've worked for free or I've done something just to get into their sphere, their network, to tap into their knowledge, all those sorts of things. And that's how I've accomplished a lot of the things that I've accomplished is just finding that mentor. So it's very, very powerful to be able to find somebody that you can almost mirror their actions. It's like, why make all the mistakes, the newbie mistakes, trying to figure out DeFi or real estate or whatever it is that you're trying to get into, when you can find somebody that already made the mistakes. They can help you navigate those waters.
And
So
avoid making them yourself.
exactly,
Yeah.
exactly. So with that, thank you again, as always, David, and thank you to everyone in the chat. And until next time, Veteran Crypto out.
Peace.